Well, thank you so much for joining us today, Mr. Nolan.
Pleasure.
A couple of questions for you. Number one, what types of companies by focus, performance, or capitalization qualify as business development companies?
Business development companies not really restricted in terms of capitalization. It's a vehicle under the 1940 Investment Company Act. It's really a pass-through tax vehicle which is subject to a number of investment restrictions. It was originally set up to promote private sector investing in small businesses.
Right.
So there's no real market cap restriction. You got some privately owned BDCs. You got many publicly traded. Generally, the restrictions are in terms of broad industry diversification. You have various restrictions in terms of what type of assets you're allowed to invest in. There are certain types of assets which are called, of course, they're restricted effectively, so they are limited to a certain percentage of your overall bucket.
Okay.
But it's not so much a type of company, it's really just electing to pursue this investment structure.
Great. All right. How important is a BDC within the investment world?
It's actually really small. The overall market capitalization for BDCs is roughly $28 billion. Put that in context, one of the regional banks, like Bank of America, for example, has a $74 billion market cap.
Okay.
So relative to everything else, it's really a very small part of the overall investment landscape. The key difference is the BDCs have been growing. The banks have to pull back from certain areas of lending, and the BDCs are stepping in. And the reason why they're better positioned is banks take deposits, and that's a big driver of their regulatory structure.
Okay.
Because the government guarantees all the deposits, banks are very heavily regulated for that and other reasons. Because BDCs don't take deposits, their restrictions are relatively less. So
Right.
they have a lot more flexibility in terms of what they can invest in and whatnot.
Great. Also, what is your forecast for 2015 with regard to the influence BDCs will have on the marketplace?
I think it's going to grow. I think it's roughly, the whole sector is only $28 billion or so, so it's incrementally growing, but everything I see is the BDC structure is attracting more and more interest across the spectrum, across the investor spectrum. We have, I see new BDCs being formed fairly frequently for a whole variety of different reasons. Some invest in venture capital, others invest in first lien investments, others invest in mezzanine investments, others are focused on income, others on gains in income. But there's a lot that can be done with this structure that's attracting a lot of interest. So I think it's going to be relatively small in the overall investment landscape, but you're going to see it grow.
Great. And then also, what industries, in your opinion, can or will most benefit from working with a BDC?
Oh, the BDCs are required to be diversified across their industries. The areas where they are heavily, or relatively heavily, tend to be healthcare and energy.
Right.
So with the decline in oil and gas prices, they are impacted to a degree on that. But I tend to think manufacturing tends to be a very strong area for BDC interest. Generally it's a cash flowing business, usually has established processes, and usually BDCs are looking for companies that have a certain profile. Obviously stable management, a set area in their industry with certain advantages, good cash flow, things like that, and that's what you're typically finding in manufacturing these lately.
Right. Perfect. How can investors and BDCs more fully collaborate on certain projects?
Well, in terms of retail investors, if investors are looking for an attractive yield in terms of dividend, BDCs have provided, on average, the BDCs that we track, on average, provide an 8.8% dividend yield on average.
Great.
Now keep in mind, taxes are paid at the shareholder level, so you have to sort of tax adjust that. It's still pretty attractive. In terms of, BDCs are just working with other investors in terms of particularly private equity. If private equity is doing a large transaction and they need debt or equity, whereas before the banks might have been the place to call, now it's increasingly BDCs.
Got it. All right, and then also, what are some notable BDCs investors should follow?
Well, I think Prospect Capital, PSCC, buy-rated, $12 price target is a very good one. Monroe Capital, MRCC's buy-rated, price target $14 is another good one. Main Street Capital, MAIN, buy rated, and I think it's a $35 price target is very good. Those are three which quality managements and good stores.
Fantastic. And then just a couple more questions. Share with us some examples of BDCs that are indispensable to another company's success.
So, so it's hard to say specifically which area. The fact of the matter is I see that you're starting to see companies that actually you hear about a lot turning to BDCs for financing. I mean, for example, Forbes magazines,
Right.
BDC financed.
Exactly.
And that's just one of these household names that you wouldn't think. They think you have a line of credit with a large bank, and suddenly they're getting BDC financing. And it just sort of shows that the funding landscape for a lot of these middle market companies is sort of shifting.
Right. And then last question for you. What are your views on the Pristine conference today, and how do you think that it benefits not only investors but advisors as well?
Oh, it's helpful. I mean, we get to hear companies, quality companies like Monroe and Prospect that we just heard. And I think these are names which I think would appeal to retail investors, particularly because they're high dividend yield.
Fantastic.
Great.
Well, thank you for joining us and giving us a little